Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we help you learn to invest in 45 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and for the first time in 2021, I am joined by my equity buddy, Ren. How's it going, bro?
I'm very good, Bryce. Great to be back. 2020.
Yes, 2020 vision, classic.
We're back for a third year.
Is it a third year?
Third year, yeah. Started in 2017. Oh,
fourth year.
We've done 3 full years.
Yeah. Yeah, good that you've started on the right track when we're in a podcast about numbers.
Yeah,
and
yes.
No, time is flying. 4th year for Equity Mates. So how's the break? We had a few weeks off, which was nice, refreshed.
Yes, but the content train kept chugging along.
It did.
With our summer series.
Yeah, which we had a lot of fun recording, and the feedback has been great. So we're hopefully going to continue doing some similar episodes like that throughout the year.
Yep.
I think it was a really good opportunity for us to show everyone how we think about stocks, and it's been received really well, as has the launch of Get Started Investing.
Yes.
So that's been fun. But we're not here to talk about what has been, Ren. We're here to talk about what is going to come in 2020 with one of our favorite episodes of the year, Bold Predictions.
Yes.
So before we kick off, I think it'd be good just to chat about our summer break. Did you buy and sell anything? Did you think about what you're going to do this year in terms of a strategy for your investing portfolio? Did you take stock? Did you lay by the pool?
Yeah, so I was actually having to think about this before. I don't think I bought or sold anything since we've last been on air, so that's a bit of a letdown to begin with. For me, and this will come through as we go into our bold predictions, we're very much in the late part of the cycle. I think everyone is very aware of that. We're in the longest bull market since World War II. And so my thinking is around that. It's around fleeing to safety, going to some of the big names. And then another thing that I want to do more of is access LICs, listed investment companies, or managed funds, partly because I think I trust active managers to weather a downturn better than my portfolio. But also it's something that I'm very underweight, I guess. I've done a lot of stock selection and I've got a lot of ETFs, but I don't have a lot of managed funds in my portfolio. So that's going to be a focus for 2020. So number 1, flee to safety because we're in the late cycle. Number 2, managed funds. And number 3 is we finished 2019 talking a lot about small caps, and I want to have a crack at picking some small caps as well. So that's probably my goals for 2020.
Nice. Individually pick small caps?
Yes. Yeah.
Okay.
Yeah.
Looking forward to seeing that play out.
Yeah.
Keep me posted.
Will do.
You think it's the time to be picking small caps?
I think that...
Considering your number 1 priority is flee to safety.
Well, I think small caps are probably a little bit divorced from the business cycle in some sense because they're following their growth cycle, and obviously the broader market cycle and the broader business cycle will affect them, but probably not to the same extent as the bigger companies that are bigger parts of the indexes and more exposed to sort of big macro factors. I think small caps and micro caps are probably more affected by individual company outcomes and individual company fortunes. You know, if you're trying to grow your sales from 8 million to 16 million, it's a lot less reliant on a good overall economy.
Fair call.
Yeah. What about you? Did you buy anything over summer?
I did buy a few things over summer, but what I did was take the opportunity to actually do a full stock take, I guess, on my portfolio because it was clear towards the end of the year that I'd bought a number of ETFs that really overlapped each other, you know, over the last few years. And it's just a waste having, I guess, similar ETFs, if that makes sense. So I sold out a fair bit of overlapping ETFs and consolidated a lot of them into sort of one singular one.
Right. MSCI All World Index?
No. Actually, BetaShares have a new one called DHHF, and it's a diversified high growth ETF, but it's just incredibly diversified. It's 8,000 stocks across the world.
Right.
It's high growth because it's 90% equities 10%, bonds and cash. That's the sort of weighting they have to it.
Right. As opposed to a normal ETF, which is 100% equity.
Yeah. Hey, it's diversified. It's a multi-asset.
Okay.
And I also bought Gear, GEAR. They're also by Beta Shares. It's a geared or leveraged ETF that gives exposure to the ASX 200. Now, I know that kind of contradicts what I just said by having the DHHF, because that also has exposure. But I wanted to get a bit of leverage underway. I know it's late in the cycle as well.
Yeah, I was going to say, we've got very different outlooks, I think.
But I have just put a bit in there to start sort of building the base for that, because it's a very long-term play. And what I did was trimmed a lot of the additional stocks, single stocks that I've got in there that I was really overweight in. Afterpay, trimmed that. Another stock that I found in the actual Equity Mates group, EOS, it's been booming, so I trimmed some of that and put that all into these ETFs. One stock that I did some research on is my beloved BKI, Brickworks Investments, that I bought ages ago. I looked into it and the damn thing hasn't outperformed the index. And it's a listed investment company. It hasn't outperformed the index for like 10 years now.
Yeah.
And I haven't sold it because I think I'm just too emotionally connected to it. But it just makes sense to get rid of it and put that money just straight into the index, right? Because it's doing what it's supposed to do. It's providing dividends, but it's just smarter play to put it in the index.
I mean, devil's advocate is that it hasn't outperformed the index because the index has boomed of late. And maybe when it will outperform is when we don't have such just a general rising tide. When everything's going up, it's a lot harder to outperform the index.
Yeah, it's true. And to your point around LICs, and we're going to spend a bit more time on LICs, towards the start of this year. I think it's an important time to start thinking about LICs when it comes to late cycle, but just, to your point of probably much better thinkers about how to create defensive.
Yeah. They hedge risk better.
Yeah. So I guess my strategy has been to really consolidate, and I'm going to try and avoid single stock picking at the start of the year.
Really? That's a bit of a cop-out.
I know, but I'm just going to see what happens, because at the moment it seems like you can throw a dart at the stock market and what it lands on, it's going to go up. And I think that's a bit dangerous. So we'll see what happens. But I'm going to try and stay away from individual stock picking.
So does that mean that your stock of the year is going to be a diversified ETF?
I did consider that, but that's super boring.
Yeah.
Nice, Ren. So is there any major sort of areas, I guess, that you are interested in from a, I guess, thematic point of view that you think 2020 will be?
That's one of my
that's one of your predictions? Okay, let's crack into it.
Now, to start with, we like to do a speed round with our guests. I'm going to do a speed round of bold predictions with you to begin. So simply, it'll be over under. So I'll give you, a growth rate or something, and you either take the over or the under, and then I'll take the other side of it.
Oh, and that's it?
Yeah, that's it. That's just to kick things off, just to get us in the mood.
Okay.
All right, so to begin with the speed round. The ASX 200 index up 20%.
By end of year?
By end of year.
No.
So you're taking the under?
Yes.
All right, that means I've got the over. The S&P 500 index also up 20%.
No.
Interesting, a little bit bearish.
Yes. You could say that.
Australian residential property generally, I know that there's different states and all that, but Australian residential property generally up 10%.
Yes.
You're taking the overs?
Yes.
Bitcoin, flat.
Interesting. No.
You're taking the under.
Well, it could be up or down. You said flat.
Yeah. So if you take the under, you think it's going to fall from where it is. Or if you take the over, you think it's going to go up from where it is.
Oh, okay. I see what you mean. So I'm not... Okay. Over.
Okay. So by the end of the year, you think it'll be up from where it is now?
Yes.
Last one, the Australian Reserve Bank's interest rate plus or minus 0%.
Wow.
Yeah. Will we have negative rates is essentially the question.
Wow. No. So I'm going plus 0%.
You think it'll stay over 0?
Yes.
Okay. I've
left you with some tough
I'm taking
ones.
negative rates. That's all right. That's the game we play.
Do all of those accompany a beer?
Yeah.
Wow. So if you've just joined the show, welcome. Glad to have you on our Equity Mates journey of investing. The way that this episode works is that Ren and I, as you just heard, will throw out a few of our more bold predictions for what we think will happen in 2020. But the rule is for each one of them that is taken, there is a beer on the line.
Yeah.
So looking forward to already recouping five beers.
You reckon?
5 beers.
Look, I probably didn't disagree with you too many times there. But
What did you disagree on?
Bitcoin, I think, will be down.
Okay.
Australian property may not make 10%.
Yeah, may not. But one of my predictions, well, I may as well just say that one of my predictions is that Australian property will be 10% plus.
Oh, okay, there you go.
So
well, you can't double down on
that
it.
covers that. Yeah, you've just completely stolen all my content.
And that's the episode.
That's it.
All right, well, seeing that I've stolen all your content, do you want to use what you got left to kick us off?
I just want to make a bit of a general comment about what I'm sort of reading and feeling about 2020. I think maybe for the last 2 years, I've generally been bearish.
Yes.
And it hasn't played out for me.
Yeah, I know. Yeah.
And that's because the sentiment has also been, people have been kind of bearish in their discussions that, slow down, there's going to be a recession. And when people talk about that, it generally doesn't happen because everyone's quite, reluctant. The chatter has completely almost reversed now.
Yep.
And now we're hearing we're not going to have a recession. Global growth might slow down, but, trade war is easing. Rates are low, so people are borrowing, house prices are going to increase. It's not as bad as we thought. When that sort of stuff starts to happen, people become confident and start moving up the risk scale, the risk curve, and buying into things, looking for a return that they would otherwise perhaps not buy into. And that's where danger starts to happen, is where people are not necessarily thinking that there's going to be a recession. That's when there's trouble. So my kind of general theme is that overall, I'm bullish at the moment that what we're seeing is going to continue for a while, but the sort of long-term 2020 risk for me is definitely bearish, if that makes sense.
So you're entering a third year of being bearish.
Long story short, yes. Bearish in the sense that sentiment has changed, and I think that's going to have an impact.
Yeah, I'm actually on 100% the same page as you. To prepare for this episode, I was reading some of the big investment banks' 2020 outlooks, and a lot of them talk about how short term, there's no recession indicators, how recessions generally are preceded by tightening of monetary policy, so interest rates going up, and what we're seeing is easing. They talk about how all these lead indicators of global manufacturing are ticking up. They're talking about the Chinese growth stabilizing. They're talking about the US being in an election year, and, unless something surprising happens in November, generally the economy will do well. But yeah, it makes me think that now is the time to be a contrarian.
Yeah, absolutely. Yeah. And if you look at just the classic case of earnings expectation versus what stock prices are reflecting in earnings, it's just getting more and more divergent. We're getting earnings downgrade after earnings downgrade in parts of the Australian market and the US, but stock prices just keep getting higher and higher, and it's just alarming.
Yeah.
So without any further ado, my first one, Ren, is that Australia's economic growth rate is anticipated to be 2.75%, 2.75%. But I think that we will come in for an annual growth rate of 1.75%.
And I get any number other than 1.75. So if it's 1.76, then I win it.
True. So hang on. Let me rephrase then.
Yeah.
It will be less than anticipated and underwhelming.
You think it'll be less than 2.75? When has a developed economy ever had
2.75%? They're coming in at.
Yeah, but when's the last time a developed economy hit 2.75%?
That's the anticipated. I'm saying it will be underwhelming and come in less than anticipated. I don't care what they're anticipating.
Well, we just need to define it for the bet.
I'm saying 1.75.
Oh, you're going to say it's below 1.75?
Yeah.
Okay. And I'm taking above 1.75 if I take it. Oh, look, I'll just take it for the sake of the bet.
Taken?
Yeah.
So you're saying it'll be above?
I guess so, yeah.
Okay. Nice. Ren takes. All right, hit me.
Okay, so we had some big stock movements this year. We had 3 companies cross $1 trillion in terms of market cap: Amazon, Microsoft, and Apple. Apple is currently at $1.4 trillion in market cap. I'm going to say in 2019...
2020.
Sorry, 2020, we have a company that crosses $2 trillion.
This is really interesting. I thought this... So you're saying Apple?
No, I'm saying a company crosses $2 trillion.
I thought the Apple, $2 trillion, but 1.4 to... They need to throw in an extra 600 billion.
Yeah, it's a lot of money.
It doesn't sit with my general feeling of what's going to happen this year. I am going long, large caps in the US.
Yeah, because you're just indexing everything.
I'm going to say no.
Oh, come on, take it.
Does this include Saudi, Aramco? Are they at 2 trillion? Because they're close.
We can...
Fine, I'll take it.
Nice.
But I don't believe it deep down.
That's all right.
Let that be on record. India will be the star stock market performer out of US, Australia, China, Japan. What other big ones are out there?
Germany?
Euro.
No, Euro's not. Yeah, Germany,
UK. All of them. It'll beat them all. Their major stock market index will outperform all of those, not combined.
Yeah, I'll definitely take that.
Really?
Yeah.
Nice.
Yeah.
Okay. You don't think so?
I'm not confident on India.
That's fair. Take it.
Although I do own some of BetaShares India ETF, so, you know.
So you're not backing yourself.
Oh, it's a big country, you know. It's good to be diversified.
So Ren's taken that?
Yeah, I'm definitely taking that.
Nice.
Equity, mate.
All right, next one from me. In Australia, we have the WAX stock index, which is now triple A's. So it's WiseTech, Appen, Altium, Afterpay, and Zero. Don't know how you pronounce it with the X, but they're essentially Australia's tech index. In 2019, the 5 stocks averaged 88% growth for the year. 2 predictions here. First one, that those 5 stocks will average the same or better.
Wow.
Big call. And the second one is that Afterpay will be the worst performer of the 5.
I will take both of them.
Okay.
Yes. I don't think they will average 85 or better. And I think that Afterpay will perform better than one of those 5.
Okay. Do you want to say which of the 5?
It'll perform better than zero. I have no idea why. Yet to find a measure for this, but ethical investing inflows will be the largest ever in Australia than previous years.
Oh, well, no, I 100% agree with you.
Oh, damn.
Yeah. To your question before we started this, when you were asking what's the theme going to be of the year, it's definitely going to be sustainable investing.
Yeah.
There's no doubt in my mind that sustainability and ethical investing is the theme of 2020.
Yeah, absolutely. Okay, then. This is another one for Australia. Agriculture will be the worst performing sector.
Oh, interesting. Hasn't been a good performing sector of 2019.
No.
We've had rain the last 2 days.
It's not going to break the drought.
Look, I'll take it.
Nice.
I'll take it. Yeah.
Nice. Okay.
Yeah.
All right. Hit me.
So there's going to be a couple of big IPOs this year if everything goes to plan. ByteDance, which owns TikTok, your favorite app. And
It's not true.
And AirBNB is a big one that is slated to go public in 2020.
Yeah.
So I'm going to say my bold prediction is AirBNB will be the biggest IPO of 2020. And the way it's measured is percentage change from its IPO price to its end of year price.
Across any IPO on the board.
Yes.
Wow.
Any IPO of more than $1 billion market cap.
Okay, that's a good qualifier. I don't know what else is IPOing over $1 billion. I'm going to take it. I don't think so.
Okay. You are a TikTok fan.
Yeah, if it was TikTok, then. I reckon that CSL, a star performer of the Australian Stock Exchange, will be the biggest company on the Australian Stock Exchange by the end of 2020.
Really? That's a good prediction. I like that. Look, I'll take it to be sporting.
Not bad.
Yeah.
It's not. So
Come on, CBA.
They hit $300 this week. Yeah, CBA. That's what you're riding on. You're riding on the banks to rally this year. So Ren's taken that. All right, what else have you got?
So we talk about falls coming from surprising places, and last year, maybe not as surprising, venture capital had a tough year driven by WeWork and the huge valuations that they were driving in that space. I think 2020, private equity will stumble.
How do we measure this?
I know, it's tough. It's tough.
Yeah, it's
like you could say, you
like,
could take
I'm
some
thinking
of,
like SoftBank sort of stuff.
You could take like KKR, which is one of the biggest in the field, and say it'll lose a fifth of its market cap or something. But I think it will be a big news story.
Yeah,
in and of itself.
that's how I was going to...
Yeah.
We will know if it's by commentary in the media, if it's stumbled. I agree with that because I've got one similar that private equity unicorns will come under greater scrutiny. But based on what's happened with WeWork and that sort of stuff, I think that these big, high-valued companies in Silicon Valley...
So let me make the distinction though. So like unicorns like that WeWork we're investing in, I would say they're venture capital, they're more startups. What I'm talking about with private equity are all these leverage buyouts we're seeing, you know, of the Toys R Us and the Dick Smiths and all of that kind of stuff, where private equity firms get cheap debt, buy these companies, put the debt on the companies, and then either restructure the companies or strip them for parts and sell them off. That's what we've really seen massively in the retail space over the last few years. And obviously because debt's so cheap, it has just been a boom. Really, since the GFC, it has been the biggest winner. I think there's too many people chasing these companies, which aren't great companies to begin with.
Yeah.
So, yeah, I think it's going to stumble.
I agree, but for the fun of the game, I'll take it.
Nice. All right. You got one?
Yeah. Just a quick one. 2020 will be the return of piracy.
Oh, wow.
There are too many streaming services now available.
Not bad. That's a good call.
It will be the return of piracy.
How are you going to measure it?
Don't know.
News stories?
News vibe.
News vibe. Okay.
Yeah. People will get sick of the amount of streaming services that are out there, won't want to sign up to all of them, will be overwhelmed with the amount of content, and will just start illegally downloading stuff themselves. Or we will see a provider come out and consolidate them all like cable TV.
I tend to agree with your first one. I think that's... But I'll take the bet.
Yeah.
I don't think the second one will happen. I don't think there'll be a consolidation.
This year or ever?
Not in the short to medium term.
I definitely think they will.
I just don't
Not this year, but I definitely.
Like, I understand the logic of it, but I don't think I understand it from... Like, if you would say Disney isn't going to sell Disney Plus, so then Disney has to be the consolidator. But why would Disney buy Netflix with all of its debt and stuff like that when... they're now in a race to see who can create more content?
No. It wouldn't be buying and selling between them. Someone will come in and aggregate a platform where you pay one subscription fee and get access to all of them. That's what I'm saying.
Why would Netflix license their content to someone else?
Eyeballs. To get eyeballs. Eyeballs is key.
They don't make money on advertising. They don't need eyeballs. They need subscriptions.
They'd take a cut from the middleman.
Okay.
Watch this space. Watch this space. Maybe there's a business idea there for us. Shock 'em. All right, you're up, Ren.
Okay. I've got some more financial ones, but I think we've been talking for a while, so I'll get to some of my non-financial ones.
Yeah, and then we've got stock of the year.
Yes. All right, my first other prediction, there'll be a third-party challenger in the US presidential election.
Wow.
Yeah.
Out of nowhere.
Or I think my gut would say either if someone like Mike Bloomberg or Joe Biden don't win the nomination, and they might run as a third party, or a more moderate Republican would run against Trump, like a Mitt Romney or someone like that.
Without turning this into a political podcast, I didn't see Bloomberg in the latest debate.
He wasn't. No.
Is he out of the race?
No. You need to hit a certain fundraising threshold and a certain number of donors, and then you also need to hit a polling threshold. And because he's new into the race, he hasn't hit those all yet. There's a couple of other candidates that didn't make the debate, Andrew Yang and stuff like that. But yeah, he's still in there. He's spending heaps of money.
Heaps of cash, yeah.
This
is a really interesting one. I don't know enough about it to make a good judgment on it, but I'm interested to see how it plays out. I'll take it.
Nice one.
Trump did get impeached, Ren.
He did. You won that.
Which I came in late last year. Yeah. I don't think he will be removed from office. I think there will be some interesting conversations that come out of the trial that he's in at the moment. I think a few Republicans will turn against him.
This is such a vague prediction. Okay.
But he will be re-elected.
Oh, wow. Okay. Yeah. I'm not going to take it.
Nice.
I tend to agree with you.
Damn. That's just such disappointing news if he does.
Oh, there's actually one financial one that I've missed, so I'm just going to jump back to finance quickly. So the US Federal Reserve has been engaged in a massive quantitative easing program. They've been going into the market and buying a lot of bonds and a lot of assets to try and stimulate growth across the economy. At 2015, that program peaked at 4.5 trillion, and then the Fed started to sell some of those assets. They got below 4 trillion. They're now at 4.18 trillion. My bold prediction for 2020 is that the Fed will top their 2015 peak of 4.5 trillion. They will end up buying more assets to get above that number.
I tend to agree.
Okay.
Yeah, sorry. I actually want to do two in one here, and I should have said this right at the start, but I think that both the S&P 500, and this plays into my bearish, the S&P 500 and the ASX 200 will finish lower than where they are right now.
But in the speed round at the start,
Yeah, you said up 20%.
You said below 20%,
Yeah.
didn't you?
Yeah.
Yeah, I'll definitely take that. Yeah. Let's rip through a couple more and then close this episode out. Another non-financial one. Another country either announces a vote to leave the European Union.
Wow.
Yeah.
No,
No? So you're taking it?
I'm taking it.
All right, nice. That was bold.
That was very bold. So, Ren, I'll just close out with a pretty easy one. This is my final bold prediction for 2020, and that is we won't see negative interest rates, but we will see an interest rate cut and serious consideration for quantitative easing.
I think we're already seeing consideration of quantitative easing in Australia. Given that in the speed round you forced me to support negative rates, I will say that we will see negative rates.
Yeah.
So I got to.
Oh, you think we will see negative
I'm nothing
rates?
if not consistent.
Yes, that's true.
Let's close it out there. We are traditionally finished with a sports one.
Oh, yes.
I could say the Aussie Boomers come top 2 in the Tokyo Olympics, but that's
interesting.
Yeah. But we generally talk AFL, so my bold prediction for 2020 is that, well, it's actually not that bold. It's actually very mild. The Swans finish higher than Essendon.
Well, mate, considering Dyson Heppel's shaved his dreadlocks, I think he's going to be a much better captain in 2020.
I hear he's like Samson. I hear he gets his power from his hair.
Well, that hasn't worked for the last few years. I will take that bet. I think Essendon will beat the Swans. I think we play in round 3. I think that Hawthorn will be the surprise packet and end top 4. That's my bet.
You think the Bombers will finish top 4?
No, Hawthorn.
Oh, sorry. The Hawks will finish top 4. Mitchell's back. I'll just take it.
Nice.
Why not? All right. So that is our bold predictions. We should set up a page on our website or something where we track what we do every year. So
Yes.
maybe that's what we'll go, equitymates.com/bold predictions. And by the time this episode's out, that page will be up.
Absolutely. So that's a lot of fun. We'll check in with these throughout the year. All of those have a beer attached to them. Looking forward to recouping some beers at the end of the year.
Yeah.
And we will be also talking about our stock of the year picks. One of my bold predictions, Ren, is that this is your year. This is your year.
Okay. 4 stock of the year.
4 stock of the year.
We'll explain why it hasn't been my year in past years in this other episode, which will probably get released same day as this.
Yeah.
But we are just staggering them because we've waffled on for a long time in this one.
Yes. Nice, Ren. Well, great to be back in the studio with you and kicking off Equity Mates for 2020. Looking forward to a massive year. Thanks to everyone who listened to our series over the summer and follow us on Facebook, Instagram, Twitter. We're all there. Sign up to our Thought Starters. Buy a T-shirt. You know this. You know
Yeah,
this feel.
you know
Rate,
the
share,
drill.
listen. Blah blah blah.
This is year 4. We know what we're doing.
We've got a cracking episode coming up with one of our favourite guests and longtime supporter of the show to talk about his 2020 bold predictions as well. So looking forward to that. We'll speak next week, Ren.
Thanks for listening to Equity Mates Investing Podcast, a production of Equity Mates Media. Please remember that everything you hear in Equity Mates Investing Podcast is general advice only. The content has been prepared without knowing your personal objectives, specific financial circumstances, or goals. The host of Equity Mates Investing Podcast may maintain positions in the companies discussed. Before considering any investment, please read the product disclosure statement and consider speaking to a licensed financial professional.